I will delete this file in 20 minutes, not because it's fake, but because after this, you will no longer have a single comfortable argument left to believe that this is just technology. At 4 in the morning, when the lights are off in the Federal Reserve Building but the server corridors hum like the engine room of an icebreaker, I wasn't looking at slides. I was looking at code, dry lines, comments written by people who don't think in moral categories. They think in terms of control. The internal memorandum sat next to it. Not a press release, not a bill. A technical appendix. A report marked with a classification never shown to committees. There were no words like confiscation or expiration of money. Instead, it was neat and clinical. Programmable decay parameter. A decay parameter, 90 days, not for everyone, not immediately, conditional, trigger-based. And in that moment, I understood why they called the project ICEBREAKER, not to speed up payments, to break resistance. On the trading floor, where there is usually noise, calls, keyboards, shouting, a heavy silence settled in. The kind that appears when people simultaneously realize there's nothing left to argue about. Hands were sweating not from fear, but from understanding the scale. Terminals froze for fractions of a second, as if the system was checking itself. And every microstall spoke louder than any official statement. This is not theory. It's already being integrated. The code was simple. That's always the most frightening part. No evil genius, no complex algorithms, a timer, a condition, a flag. If funds are classified as stimulus, emergency, or targeted, the countdown starts. When the period ends, zeroed out or forcibly redirected. Not directly into the government's pocket, into approved channels. Food, rent, taxes, no saving, no waiting. Money stops being a store of value, it becomes a behavior tool. I saw a comment in the code, short, almost playful. Velocity enforcement. Forced velocity. That phrase explains everything, because the system's real problem today isn't a lack of money. It's that people don't want to spend the way they're expected to. They save, they hesitate, they slow down, and slowing down is the enemy of debt. When velocity drops, pyramids start to creak. The cynical logic is airtight. If you can't raise trust, raise pressure. If you can't make people believe, make them move. Programmable money solves a problem that rates and speeches can't. It removes choice. Not through bans, through design. You can have funds, but you cannot have time. I remembered the meeting on the 42nd floor at 6:15 a.m. The same room as always, windowless, the same smell of coffee. On the screen was an adoption curve, not for users, for banks, payment systems, retailers. Once the infrastructure is ready, people follow automatically. Not because they want to, because alternatives disappear. Cash becomes obsolete. Bank deposits become inefficient. Everything is framed as optimization, as care. Report 404B, this time focused on behavior, population response modeling. 3 groups, those who spend immediately, those who try to bypass the system, those who freeze. For the first group, everything works. For the second, flags and penalties. For the third, pressure through access to services. Not bans, friction, queues, reviews, delays. The system doesn't break you, it exhausts you. And this is where the loop begins. Money expires. People spend faster. Faster spending distorts prices. Distorted prices justify new adjustments. Adjustments justify new code conditions. Conditions grow more complex. Exceptions multiply. Eventually, no one fully understands the rules except those pushing updates. This is a digital prison without fences. Because fences are visible. Interfaces are not. I saw loss models, not financial losses, behavioral ones. Loss of the ability to wait. Loss of the meaning of saving. Loss of household independence. When money has an expiration date, planning becomes a luxury. You live cycle to cycle, update to update. And every time, the system knows more about you than you know about it. Because every transaction is a signal, every pause is a deviation. Why is this sold as security? Because security is the universal justification. anti-money laundering, anti-terrorism, anti-evasion, all noise. The real goal is manageability. Money is the last universal language. If you control its grammar, you control the conversation. I watched risk managers change their vocabulary. They stopped saying confiscation. They said unused balances. They stopped saying expiration. They said validity period. Language smooths resistance. Code does not. Code executes the same way for everyone inside the system. And here lies the most dangerous illusion. People think this will only apply to benefits. It's temporary. It can be turned off. All of that is true until the next crisis, because every function created for an emergency survives it. It's too useful to abandon, too efficient to forget. I watched funds expire on a test environment, simply vanish from the wallet, no error, no warning. The log read, expired, like food in a fridge. Except this wasn't yogurt, it was your labor, your time. At that moment, everything inside me went cold, not from fear, from understanding that a line had been crossed. Money stopped being neutral. No conspiracy is required, just inertia. Banks want control. Governments want manageability. Corporations want predictable demand. Everything aligns. No one feels like a villain. Everyone optimizes their metric. And the sum of those optimizations is a system where you can say no only once before access is cut. The most insidious part is the gradualism. First voluntary, then convenient, then mandatory. Cash doesn't disappear because it's banned. It disappears because it's no longer accepted. The digital dollar isn't imposed. It's made the only frictionless option, and friction becomes the new whip. When I left that environment, they told me, "You're exaggerating. This is the future." Yes, it is the future. But the future is not a justification, it's a direction, and the direction here is clear. From money as a right to money as permission. Project ICEBREAKER doesn't break the system, it breaks the habit of resistance. It makes control invisible, and therefore effective. And if you think this isn't about you because you have nothing to hide, you're missing the point. This isn't about hiding, it's about choice. The right not to rush, the right to say later. When code decides when you spend, money is no longer yours. It's rented. And the landlord can always change the terms. This is not a warning. It's a description of what is already being assembled. And when you feel it, it won't come through headlines. It will come through a notification, through gray text, through a number that simply disappears. And here the road splits into 3 paths, and all of them lead into the same frozen channel. Not because the end is unknown, but because the ice is already closing behind you. After the code review, after the 90-day timer stops being hypothetical, after programmable decay leaves the lab and enters production, the system does what it always does when a capability becomes too useful to remain optional. It normalizes it. In the first version of the future, the one sold as pragmatic and humane, the feature is introduced gently. Limited scope, carefully framed. Emergency disbursements only. Disaster relief. Stimulus. Temporary aid. The language is precise. The promises reassuring. People receive funds that arrive faster than ever, with fewer forms and fewer delays. The trade-off is invisible at first because the timer is generous and the channels are familiar. Spend on food, fuel, rent. Everything feels like help. Velocity rises. Officials celebrate efficiency. The public nods, relieved that something finally works. But even in this soft version, a habit changes. People stop thinking in months and start thinking in windows. Planning compresses. Savings feel awkward when money asks to be used. Merchants adjust pricing to match the cadence. Promotions cluster around expiry cycles. The economy hums, but it hums on a leash. It's not control by force, it's control by convenience. And convenience is the most effective lever ever invented. Then the second version arrives, not announced, just inferred. The scope widens, not because anyone voted for it, but because the infrastructure is already there and the exceptions are expensive to maintain. Targeted credits expand beyond emergencies. Incentives replace subsidies. Rebates replace deductions. The timer remains configurable, but the defaults shorten. 90 days becomes 60. 60 becomes 30 for certain categories. The justification is always technical: fraud reduction, policy alignment, budget certainty. People notice friction before they notice intent. Certain purchases fail without explanation. Certain merchants are temporarily unavailable. Appeals exist, but they are slow and automated. The interface smiles while it denies. Those who try to route around the system discover flags. Spending patterns become profiles. Profiles become permissions. You are not told no. You are told not now, often enough that you learn the rhythm. Prices respond, not because of scarcity, but because of compulsion. When money must move, sellers capture the urgency. Inflation takes on a strange texture, not broad and explosive, but pulsed and localized. Staples jump near expiry windows. Durable goods fluctuate with policy cycles. It feels chaotic until you realize it's synchronized to code updates. Markets don't panic, they adapt. Adaptation is not freedom, it's compliance with a smile. And then there is the third path, the one nobody rehearses publicly because it requires saying the quiet part out loud. A shock arrives. It always does. A funding gap, a geopolitical escalation, a banking wobble that demands temporary measures. The timers shorten across categories. Controls tighten overnight. Cash usage drops not because it's banned, but because it's inconvenient, suspect, or simply unavailable where it matters. The digital rail becomes the only rail that clears without delay. What was once an option becomes the default, and what was the default becomes an edge case. This is where the design reveals its true purpose. The system doesn't need to persuade you to spend. It needs to ensure you cannot wait. Waiting is descent in a debt-saturated world. Waiting is optionality. And optionality is what collapses pyramids. So the code removes it, cleanly, quietly, and with plausible deniability. No knock on the door, just a countdown. If you want to know which version you're entering, don't listen to speeches. Speeches lag. Don't read white papers. They are aspirational. Look at behavior. Look at procurement contracts for payment infrastructure. Look at pilot programs that never end. Look at how often temporary extensions renew themselves. Look at how quickly exceptions become suspicious. Look at how banks talk about deposits when programmable balances exist. When language shifts from ownership to access, the ground has moved. Don't watch the news. Watch the rails. Watch which transactions clear instantly and which wait. Watch how error messages change from failed to restricted. Watch the audit logs that grow more detailed while appeals grow more opaque. Watch how identity requirements creep from onboarding into every purchase. Watch how merchants prefer one rail over another because settlement certainty beats customer goodwill. These are not accidents. They are incentives doing what incentives always do. And while you're watching, understand the invariant. Control systems do not retreat on their own. They only expand or get replaced. Every crisis adds a feature. Every feature survives the crisis. Over time, the stack becomes irreversible, not because it's mandated, but because too many dependencies rely on it. At that point, arguing about intent is irrelevant. The capability exists. That is what matters. So what do you do when money stops being neutral time and becomes directed motion? You reduce exposure to clocks you don't control. You shorten chains that require permission at each step. You keep options that settle outside programmable lanes. You accept lower yield in exchange for fewer conditions. You prioritize resilience over optimization, because optimization assumes stability, and stability is now a policy variable. Keep liquidity, but diversify its forms. Not everything needs to be fast. Some things need to be free of triggers. Keep assets that do not require an update to remain valid. Keep relationships local and redundant, because centralized convenience becomes centralized failure under stress. Reduce dependency on just-in-time living. When timing is enforced, slack is survival. This is not nostalgia for cash. Cash is a symbol, not a solution. The solution is choice. The ability to say later without penalty. The ability to hold value without justification. the ability to plan beyond a cycle. When those abilities erode, society doesn't collapse, it contracts. It becomes busy, compliant, and short-sighted. That is the danger, not chaos. Obedient motion. At the end of this road, regardless of which version dominates, there is a philosophical line you cannot cross without noticing. The line between money as a right and money as a lease. Rights assume persistence. Leases assume conditions. When conditions change, the leaseholder adjusts or loses access. This is efficient. It is also final. Saying yes to this arrangement is easy. It's framed as progress. It's wrapped in safety. It promises speed and inclusion. Saying no is harder. It sounds regressive. It feels inconvenient. It requires building alternatives before you are told you need them. It requires accepting friction now to avoid compulsion later. The right to say no does not come with refunds. It comes with responsibility. Responsibility to see that when incentives are encoded, politics moves into software. Responsibility to act before the defaults harden. Responsibility to preserve spaces where time still belongs to the holder, not the issuer. Project ICEBREAKER does not announce itself as a wall. It is a current. Once you are in it, swimming against it feels irrational. Everyone else is moving faster. Everything works better if you stop resisting. That is how freedom is traded for efficiency without a vote. This is not a prophecy. It is an engineering trajectory. Trajectories can be altered, but only before momentum becomes mass. After that, you don't argue with the river. You choose where you stand. When the countdown appears, it will not ask for consent. It will not explain itself. It will simply run. What you do before it runs is the only part that remains yours.